got a bunch of numbers. Biocon is the one that is buzzing around, and the numbers were top-down beat driven by biosimilars business. We had Ekta speak with Kiran Mazumdar Shaw, and this is what they conversed about.
We are guided for an exit trajectory of $1 billion, which is what we have exited at. And I think we will build on this billion-dollar trajectory during FY24. As you know, we have much to look forward to, starting with the adalimumab launch in July this year. And we also hopefully expect our approvals for Aspart and bevacizumab during FY24, which will add to the growth potential of our biosimilars business. We also are tracking well in terms of transitioning the business from Viatris to Biocon Biologics. And so, as you know, the biosimilars business is the key driver of growth this fiscal for the Biocon group. Of course, research services is also delivering a very robust growth, and that also will be pushing growth for the group, this fiscal. But overall, I think the Biocon group is poised for a very strong growth ahead.
Okay, margins have improved this quarter around 26% on a blended basis. This is despite higher R&D costs, which you expect will settle at around 12% going forward. What aided margins? What's the guidance?
Well, I think a number of factors aided margins. I think one of the activities we had this quarter was a good licensing deal that we struck for one of our biosimilar assets, which we decided to reprioritize. And we've had other contributions from our businesses that has improved our margins. But overall, I would say that it's really the strong fundamentals of our business that you should look at. Core EBITDA is something that I would always watch for our business because, as you rightly said, R&D expenses have absolutely zoomed, to a very, very high level. As you know, the R&D spends for this fiscal have been at 1,119 crores, which is almost double of the 595 crores we had last fiscal.
Well, let's just come to the Serum Biocon Biologics deal. Now that it's restructured, there is no visibility in terms of what the revenue as well as the margins could be. At one point in time, the street was working with $300 to $400 million in terms of peak sales as well as margins of 35%. Can you tell us, one, when is this tie-up going to really take off? When will it reflect in terms of sales? And what can we now expect as a ballpark figure when it comes to peak revenue?
Well, Ekta, I must remind you that we have actually withdrawn from that deal. So the $400 million that you're talking about from this deal will not be reflected in our numbers. We had guided, if you remember, for a $1.8 billion revenue in FY24. And obviously that will not be factored when we look at those revenues. But having said that, it predated Viatris. So I think the Viatris numbers will basically now be the benchmark numbers for you to look at. And as I said, you've seen us exiting this fiscal at a billion-dollar trajectory for biosimilars. And, we are guiding for a 35 to 40% core EBITDA margin. So I think that is the way we will build for FY24 and beyond.
But you still have a tie-up for the vaccine distribution.
Yes, we do have access to 100 million doses of vaccines going forward, and we still need to understand what those market opportunities are for us. But for FY24, I don't want to get into that discussion. I would rather focus on the Viatris business and what it means for Biocon Biologics.
Okay, sure. About Biocon Biologics, now that you have $150 million of the Serum loan converted into equity, what is the net debt on the books or the gross debt on books? How much do you want to pull it down by?
So as we speak, I think we have raised, the $150 million from the Serum deal, the 100 between the Edelweiss and Kotak, another 200. So we have raised about $350 million post the other fundraise, that we have done in the past. So I think overall we have brought down the net debt to 1.25 billion, and we expect to reduce it even further going forward in FY24. Not that we can't service the current debt, but I think it gives us flexibility for some business development activity.
Okay. You aren't going to sell any further stake in Sinjin. You've made that quite clear that you're comfortable with the current holding, but you are willing to possibly dilute another 10% in Biocon Biologics. At a valuation of around $6 billion, that equals to around $600 million. Is that the upper limit that we could expect, and if so, by when?
Well, I don't think we need to go to the full $600 million fundraise, but we have just given you an indication of what that could be valued at. As I said, we will look at raising equity, but we will then calibrate it in the way we look at both valuation as well as our needs. So I think that's the way we look at it. For example, this quarter, our licensing, income was able to defray the very big jump in R&D costs that we incurred both at this quarter and this fiscal.
Are you in talks with PE players as was indicated?
Yes, we are.
And when could that close by?
Well, we are in no hurry, but we will take it, as I mentioned, in a calibrated way. So we will announce it as and when we bring closure to some of these discussions.
Okay, that's Biocon in focus, up around 2.5%. We'll do one thing, slip into a short break. On the other side, we'll get you another conversation. That is with Amitav Mukherjee, who's the Chairman and Managing Director at NMDC, on their Q4 performance.